Hundreds of thousands of jobs have disappeared on Wall Street since the 2008 financial crisis. 802,000, actually. Some of the biggest banks, though, have not stopped cutting, but may be about to change that a little bit. Here with all of the details, Yalman, Onaran, Bloomberg finance reporter. I guess they're not zombie banks anymore, but 802,000 jobs cut seems like a massive amount. How much more than the usual cutting is that?
So, when I did the same exercise about 2 years ago, it was 500,000, 500 and some change. So in 2 years, another, almost 300,000 cut. That's a lot. But the good news is that when I did it 2 years ago, it was across the board, everybody cutting. This time, many banks, about 9, 10 of them, actually stopped a year ago, 2 years ago, some even 3 years ago. Then and they're adding. So it's a mixed story. It's not as negative as it was 2 to 3 years ago, and so that means the trend is at least reversing slowly. And some banks are doing better than others. Deutsche Bank still is going to keep cutting, so that is that's going to keep going, but others probably have stopped. So there's some good there and some bad, and there's some other trends that influence this, such as technology. I mean, in every industry, including finance, technology actually replaces some jobs that are being done. So that sort of secular trend will keep on going, but at least it looks like we're at the end of this horrible 10-year period where all the big banks around the world had to cut.
Yalman, are we really at the end of that? Last week, we had a story that JP Morgan is looking to cut significant numbers of jobs when it comes to the asset management division. Now we've got a story running this afternoon suggesting that UBS is looking for ways to take its asset management division forward. That could include a merger with another big operation. It's likely to remove significant amounts of costs from those businesses. We could see it maybe merging with DWS and that business then being spun out. Clearly, in asset management, the pressure on cost is absolutely massive. Jobs have got to go, presumably, therefore.
So, of course, I mean, and there are places where they keep cutting, and that's never going to end. I mentioned technology, but there are other areas. I mean, for example, JP Morgan, while it's cut in certain areas, has overall added basically all the people that it cut after the crisis, it has brought back. And, while they're doing certain things in certain areas, JP Morgan is also trying to expand branches now. I mean, that was another trend for 8, 9, 10 years since the crisis. The biggest banks and even small banks in the U.S., everybody cut branches. They closed down branches, and now they're slowly looking to open branches. Bank of America is doing the same. JP Morgan is doing the same. Even Citigroup is considering, because their branch network is much smaller than the other national banks. So there are certain areas where there is growth, and yet there will constantly be pressure on other areas. Asset management is another one. It's not the big banks all have asset management, but even the big asset managers, that's ETFs and other lower cost funds have really eaten into their profits. So that's the trend. So there will be parts of the business that will keep losing people, definitely.